Welcome to etvFutures.com. Today is Wednesday, December 12th. I'm Caitlin Sisney with your Commodities Open. Crude oil rose above $92 a barrel on speculation the U.S. Federal Reserve's decision to provide cash to banks will spur economic growth, increasing energy demand. Prices also rose after a government report showed the U.S. crude oil inventories fell last week. Crude oil is trading at $91.72 per barrel on the NYMEX. Meanwhile, natural gas is trading at $7.28 per million British thermal units. Gold rose after the Federal Reserve's announcement, boosting the appeal of the precious metal as an alternative investment. Gold is trading at $818.90 per ounce. Silver is trading at $14.82 an ounce. Today we're joined by Flynn from Alaron. Phil, can you explain why crude oil is being driven higher?
The bullish news keeps piling on and keeps piling on to the price of crude oil. Today, of course, this market has been really buoyed by everything from ice storms to Federal Reserve moves, as well as today's inventory report. Now, when we look at the inventory report, it tells a couple of different stories. Probably number one, that the pipeline fires into Cushing didn't have as much impact on crude supplies as some had feared. But at the same time, there is growing concern about heating oil supplies with a fall in distillate inventories. You put the two together, the market seems to be getting a big boost, really being driven by heating oil. If those concerns are growing, if we get a cold winter, there's fear those supplies could get tight, and that has been driving the market today. But overall, let's face it, the Federal Reserve disappointed the market yesterday. The stock market got hammered, it got crunched, it got annihilated. But today, the Fed has said that they would add more liquidity and take new steps to put liquidity in the market. That brought the stock market up, and also, by the way, is supportive for oil. If the economy stays strong and the Fed makes the right moves, the demand for oil will be really strong. If they make the wrong moves and the economy slows substantially, the demand for oil will be weak. But right now, because the Federal Reserve is telling the market that they're going to take steps to keep the economy afloat, it'll probably keep oil demand afloat as well, keeping upward pressure on prices. But beware. The thing is that right now this market is being hit with a lot of transitory issues that has been driving it higher. It's been the weather. It's been pipeline fires. It's been fog in the Gulf of Mexico. A lot of these issues are going to go away eventually, and when they do, we might find that supplies aren't quite as tight as some fear. Of course, today you got to go with the momentum, but longer term, I don't know if these issues are going to be enough to keep us up for the long haul.
Thanks, Phil. That was Phil Flynn from Alaron. I'm Caitlin Sisney. Join us again for another update right here on etvFutures.com.